All right, Bo, so you've got some breaking news for us this morning. Tell us what the plan is.
What we believe will be a very strong recovery from a rolling recession, maybe starting with a rolling recovery.
President Trump and our brilliant AI and crypto czar, David Sachs, for all the hard work that they've put in to this report and really just doing what they can to help this industry.
But gathering momentum, and we think by midterm elections next year, clearly on the up and up with big upside surprises in real growth, productivity, and downside surprises on inflation. So that would be another positive because of productivity. The last uncertainty, you can see that Bitcoin to gold is maintaining its uptrend. We'll see if it breaks out. I think the risk-on trade has helped it recently, and we think that will be the case. When that case will continue when it is clear that we're not going into a long-term recession, that the Fed is going to ease, and that a strong productivity-driven boom, I would say, in economic growth is underway, paving the way for midterm elections that should favor the majority now.
President Trump and the White House have a new plan to supercharge crypto markets, as the recent Digital Assets report aims to make the United States the crypto capital of the world. And now the stage is set for one of the biggest bull runs in history. Today we hear from Cathie Wood and her current market outlook and predictions for crypto and Bitcoin in the weeks ahead. As the momentum is building and the institutions are quietly positioning themselves, Wood says everything is about to change. She says the next phase of the crypto cycle is critical, and she's stacking big bets in her portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Cathie Wood says she's remaining bullish on digital assets after increasing her position size during the last bear market. Embracing an unyielding enthusiasm for the crypto realm, Cathie Wood confidently predicts that explosive growth is looming on the horizon. She urges investors to capitalize on the opportunities presented during market downturns as well. However, Cathie reassures that a long-expected surge awaits. Let's get right into the latest interview with Cathie Wood, as she gives her market outlook and prediction for the days and weeks ahead.
And one of the big variables that many people are wondering about now is interest rates. This week, Chairman Powell sounded very hawkish. I think he didn't appreciate being featured along with President Trump at a construction site. So there may have been something else going on there, because the data as it is evolving here is certainly moving in a direction that would lead the Fed to ease. And of course, for the first time since 1993, there were two dissents on the Fed board this time around. And that suggests that we probably are going to see interest rate cuts in the future. I think the odds for a rate cut in September are up to 88%, and a 50 basis point rate cut, maybe they're up to 25% or so. We think that will resolve positively as well. That's the one uncertainty. And the reason this matters is if people think rates are going to come down, then they're going to wait and see how low they go before they take major actions or make big purchases. So getting back to some kind of equilibrium is going to be important. And that is, we think, the last uncertainty before we move into what we believe will be a very strong recovery from a rolling recession, maybe starting with a rolling recovery, but gathering momentum. And we think by midterm elections next year, clearly on the up and up with big upside surprises in real growth, productivity and downside surprises on inflation. So that would be another positive because of productivity. The dollar, I know the headlines were blaring, worst dollar start to the year, our worst first half since, I think, 1993, if I'm not mistaken, which, by the way, was the last time 2 Fed directors had dissented from the policy being made. So you can see that all of that drama put in context was a little exaggerated, shall we say. And if you look at the next chart, I did present it for the first time last month, you can see here that the uptrend has not been broken. And if we're right on return on invested capital, it will resume its increase relative to the 26 countries in this index. Inflation, as measured by commodities, it is kind of shocking still that tariffs notwithstanding, it's today where it was in the early 90s and in the early 80s. Here's the S&P price to gold. This we're paying a lot of attention to because some of the best strategists out there, our friends at GovCal, have been suggesting that we were going to spiral down into a 70s environment with tariffs causing inflation and so forth. The market's been weighing that risk, as you can see here. The most recent move, however, in this index has been up, and we think it will resume as we get through this uncertainty, especially the uncertainty around recession and the Fed. Here, relative to oil, we think this is a leading indicator of what will happen, and it looks nothing like it did in the 70s. Here, I always like to keep this chart in mind. I started my career really near the peak of interest rates, and have been riding down the curve throughout my career, which was delightful.
Cathie says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Cathie has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
But you can see there's a downtrend, which is good, up to a point. What did near 0% treasury yields mean? It meant, in the case of COVID, are we going into a deflationary bust? And we got out of that. And maybe we have just bounced back to something more normal now that the Fed is letting markets work. We do think that the Fed is actually erring a bit in the other direction, as I mentioned before, and that will change. And with it, we do think interest rates along the entire yield curve will come down. And here's Bitcoin to gold. You can see that Bitcoin to gold is maintaining its uptrend. We'll see if it breaks out. I think the risk-on trade has helped it recently, and we think that will be the case. When that case will continue when it is clear that we're not going into a long-term recession, that the Fed is going to ease, and that a strong productivity-driven boom, I would say, in economic growth is underway, paving the way for midterm elections that should favor the majority now. So with that, I know a lot of puts and takes, a lot of charts. But it was a busy day for sure in the markets, a lot of fear surfacing once again. And yet the way we're interpreting this is another indication that the market is climbing a wall of worry. And we need these shudders every once in a while to keep speculation in check. And we think that's just another one of those checks. As I mentioned, Chairman Powell sounded quite hawkish, even though reporters were saying, well, wait a minute, housing seems to be relapsing. And he deflected that. And, well, wait a minute, the metrics you look at in terms of core growth and core inflation, they're all moving in the right direction when it comes to inflation, and actually in the wrong direction when it comes to GDP growth. I think I'm not going to get the metric exactly right, but what Chairman Powell focuses on is real private domestic final sales, and that is running in the 1% range. And we saw that with the consumption figures, very slow. The consumer is becoming quite cautious and beginning to lift the savings rate. We think that could cross 5% this year. But you see, money growth did start turning around. It was negative for quite a while. We're now up to roughly 5%. But when you get cautious consumers, that means the velocity of money, the rate at which it turns over, slows down. So the stimulative effect just isn't going to be there the way that this chart might suggest. We also know that the CPI, which is depicted in the green here, faces some tough comparisons. So I think we have two more tough comparisons at the 0 and 0.1% rate for the next couple of months. So the inflation rate could stabilize here, and maybe that's what Powell was responding to, just knowing that the optics aren't going to look great on inflation, meaning continued progress. But if we're right, that will be it. Then we're off to another leg down in inflation towards the 2% and actually below the 2% range if we are right. Now, of course, we have been expecting much lower inflation for quite some time.
Cathie Wood points out, with real money now flowing in, she emphasizes that the crypto market has become more significant than ever. Institutional investors are driving the price of cryptocurrency, which will yield massive gains in the next 3 months. Wood believes this will underscore Bitcoin's enduring relevance as an asset and as a hedge against currency devaluation. She anticipates that BTC will continue its parabolic run. Cathie Wood's main focal points this year has also been the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to political opposition, Wood advises the company in which she invests to spend heavily now in order to take advantage of huge growth potential. She estimates that ARK's concentration on technology advancement is worth about $7 to $8 trillion, or less than 10% of global equities markets. Emerging markets are relying on digital currency, and Cathie believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. What do you think of Cathie Wood's interview on the current financial market? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.